I think it's amazing. You know, all the speakers and all this atmosphere in here. You really see all these greater traders, their mindset and how they look at it, you know?
It's just nice to learn from everyone. You get different perspectives. Everyone has different styles, yet they're all successful, and you can kind of take a little bit from everyone and adapt it to your own style.
These events are probably like the #1 reason that I'm still around, because it's just really hard to excel like on your own in your own little shell. It's just so much better to have people, you know, just giving you a shoulder to lean on.
These are the kinds of things that you need to do in order to like progress in your journey, and just know that there's people here who are kind of in the same position as you. So just put yourself out there, don't be scared, and you're gonna make some nice connections and good friends here.
I think
Hello, good morning. Welcome in to another episode of Good Morning NASDAQ. I am your host, Don Master Mateo, joined by my good friend and colleague, Michael Hudson. Good Morning NASDAQ is a pre-market prep show. We're here every single morning, 8:45 a.m. to 9:15. We go through the gappers on the day, talk a little bit about the current market conditions, go through some fundamentals and filings, wrap it up with the daily chart, see if there's any levels that should affect the movement of the stock, and then leave it up to you guys to make your decisions on what you want to do with them. How we doing this morning, Huddy?
We're feeling good or feeling all right.
That's awesome to hear. Wow, that's so awesome. Make sure as you funnel in that you are subscribed right here to the Clover Trading YouTube channel so you don't miss any future videos. We post every week. We're live Monday through Friday, twice on Wednesdays. We had a great Wine Wednesday last night. For those of you who came, topics got out of control, but we had a great time. We had a lot of fun. And make sure you're liking the video. First thing you should do when you pop on in, hit that thumbs up button. Support the free content that we try to put out for you guys every single day that the market is open. All right, it is Thursday, the 18th, mid-January now, 2024. Market's been kind of so-so. We've had sputters and spurts of momentum, had fun stuff like DWAC, PHUN, MARK this week, all for them to kind of get destroyed at the end of the day and after hours on Tuesday. Yesterday had some bounces. This morning they're bouncing back or gapping up a little bit. Got a few gappers on watch, so I think that's a good place to start. What do you say, Huddy?
Yeah, let's start with the gappers.
Any particular place?
I like AgFi. I want to start with AgFi.
Jim wants to start with AgFi.
Now, this is kind of what I want to start with. I wish the market was as simple as, you know, I like the setup, I'm going to buy it and it's going to work, because that's never how it works. Unfortunately, which is why I predominantly don't long. We got AgFi as a gapper today. It's a weedling. They, you know, specialize in extracting weed, and they got some kind of contract for their extractor mechanism that is causing it to gap up 90% from $1 to 220. That's kind of the just what the stock is. The thing that bothers me, or the thing that not bothers me, the thing that's going on is a lot of weak stocks have like the stupidest bid right now. If you look at like MSOS or MJ or any of the ETFs, they're actually threatening like healthy looking charts. And I think that's because over the weekend, we had the rescheduling or reclassification of marijuana. That bill that came out in September, we got some conclusive results kind of sneakily over the weekend, and it hasn't really made headline news. And I guess my question becomes, does that like make AgFi actually run, or is this just going to be dead like most other cannabis stocks that we ever see gap up? I think that the statistics lean towards cannabis stocks aren't necessarily stocks that hold 100% gap ups, but you know, in the face of maybe potential macro news, that's wrong. That's what makes it difficult, right, to long things. I don't really like to use my subjective narrative to define what a stock can and can't do.
Yeah, so let's dive into AgFi, as you put it. 1.6 million float. News is that they entered into the first hydrocarbon extraction lab and vertical farming unit facility in California. They are pretty overall risk high when it comes to dilution and cash need. They have current cash of negative 10 million. What do you see with the offerings, warrants, ATMs?
Yeah, I think we can, I think what might be worthy of looking into is why they have negative 10 mil in cash. If you look at their balance sheet, it was all in restricted cash as of last year. And then this year it's all gone. And they're down to like nothing. I don't know off the top of my head what happened there, but that could be useful information. Got some warrant levels drawn on my chart at 345. I don't think it's like a ton of warrants, but 345 is kind of an interesting level because of those warrants. And then it had a reverse split back in July, which the high was 360. So that's kind of like, I guess, your 1 year highs, your reverse split highs, and your warrant levels. That's probably something significant on the chart if it gets up there in the first place. But other than that, most of the warrants are priced in the 2,400 area.
What about the 2022 ATM? Terminator.
Yeah, so nothing crazy, like obvious right off the bat. Again, there might be something sneaky going on here because this is a long-term downtrending chart with a couple pump attempts along the way and many, many, many reverse splits along the way. So definitely up to no good, usually when it comes to treating shareholders with respect. But 156,000 cash on hand as of September 30th, again, down from 10 mil last year. It's not a good company. I mean, from how I judge companies, it's not good. I just wonder if you're going to get some MJ heat from, this whole rescheduling thing that kind of went unnoticed. That's my main question. And so far we've seen nothing.
Yeah, I mentioned it on, Tuesday, but MSOS, which is like a weed ETF, cannabis ETF, nice uptrending chart for the last few months, had a decent little breakout on that news over the weekend. I was even just looking at random tickers in OTC land just to see kind of what those were. And there was some increase in volume and some percolation going on over there. So I think it's kind of a sneaky one. As I say with anything, whenever someone's like, oh, this news is going to come out, pay attention to this sector, or this war is going to break out in the Middle East, take a look at oil. I try not to ever front run any news or global events. Sit back, wait. The charts will develop. If AGFY were to set up over the next couple days and be a breakout or be a runner that turns into a first red day, like, I can draw those conclusions after the fact. And so just doing a little bit of prerequisite research on them is important. Do you know for sure that this is actually cannabis and not just agriculture?
It's probably a little bit of both.
I don't see any buzzwords. But they have done a few reverse splits to regain compliance. As you can see, if you go back on the daily chart, back into the thousands. The stock never traded at those levels. So I like to look at more recent resistance and see where our lines are. I drew some in the, if I could find any sort of, up in the 7 to 9 area. Not sure if that will come into play today. Stock's already up 90% on the day, but no real resistance until we get to those levels. So fairly far away. But a company that needs cash this bad. The news doesn't seem groundbreaking to me, although it tries to come across like it does. I'm not jumping on the weed bandwagon until we see some serious charts pop up. It's also one of those sectors where we've seen it run so many times that a lot of the charts are beaten down. They have done a bunch of dilution. They have done a bunch of reverse splits. So it's going to take some proving to me to get me involved. There's no clear level on this chart that it's like gapping into that makes me interested in like a potential multi-week or month breakout. So this is one that I will probably leave alone this morning. There's room to run. It is a low float. It's in a warming sector, but all the fundamentals kind of go against it. So I'll probably leave it alone. What do you say, Huddy?
For which stock? Say MagFi?
Only one we've been talking about.
I say cannabis stocks notoriously fail. Some kind of macro legislation in front of us this is the first gapper we've seen, so probably, I don't know, conflicted. Like, I think it fails. My heart of heart says it fails. I think the odds favor it failing. I just don't know if this macro news that came out over the weekend is just a sleeping, giant or not. I just don't know yet. I have to see it first. But without that information, I think it fails.
All right, next gapper on the list is LYT, which is a former China pump, if I remember. I think I did quite well on this one. India company, 11
Which
point
stock?
LYT,
I remember LYT.
11 million float,
Why is it not on my
streaming
list?
telecasting services company. Overall risk of dilution low, cash need low, the cash flow positive. But my knowledge
Yeah,
of this
so-
one tells me that it is on the sketchier side of things, kind of bouncing off its lows right now.
Yeah, this is a former liquidation scam. Text messages went out about this one back in July of 2022. Crashed from 47 down to $3 in just 2 days. So that's kind of your indication that they are sketchy, they are scammy. This is like, again, this is one of those IPOs. IPO'd 400% higher than its price, ran for 5 days, slaughtered down to the IPO price. I don't know. I generally just avoid these. I don't know. I don't like to have an opinion.
Whenever we
Right.
see any of these 2022 stocks that kind of pop back up and they're known scams and they've been known to be sketchy, I tend to just avoid them. Like whenever iLag pops back up, or what was a recent one? iLag I just saw the other day in a scanner. But any of those ones from 2022 that are known scams, I tend to just ignore because you don't know if they're in the process of repumping, trying to get the stock price back to higher levels. It does have one day back in early 2023 where it did gap up towards $1 and then run to 220 before kind of fading back off. So I'm not sure if that's the case. I couldn't find any news on this one, but it does look like yesterday it did have some sort of accumulation or something early in the morning at 10 cents to 14 and then did nothing all day. And here we are gapping up as high as 27.
And it's
just kind of
interesting
fading
because
off.
they have like so much dilution that they recently put out. It's still all pending an effect statement, but all of those shares and there's tens of millions with really disgusting conversion features. Again, none of it's effective, but all of those are in the 16 to 18 cent region. So I don't know if they're trying to repump it to get over 16 cents, hit that effective statement, and then dilute. But I don't think wherever this is going is going to be good long term.
Yeah, all that 16 to 18 stuff is pending. How can something from 2022 be pending effect?
I don't know. Maybe there's a way that they can sell it. Sometimes things aren't accurate and they have sneaky verbiage in the filings that say, hey, for this X, Y, and Z reason, we don't need an effective statement. Maybe they do. It's kind of complex at times. I try to err on the side of only, trading stuff that I have 100% conviction in whether something can or cannot be sold. And so this is something that I don't have 100% conviction in, but one day I might, and I might come back to this. We'll see, how this stock does, and if this accumulation yesterday ever turns into anything.
Yeah, and it's up 100%, but it is a 20-cent stock at the end of the day, so not going to be your top watch for most. Gap and crap shorters, shorting something at 20 cents can be quite expensive when you're looking at 5-7 cent best case scenario for a fade. But it is kind of in that price range that's been moderately warm with CRGE last week, BCEL, PHUN, MIMO yesterday. So that has kind of been the running theme for gappers is these low price stocks. I would, MIMO got hammered towards the end of the day. Did have a nice move off the lows yesterday, mid-morning, and then did make new highs before fading off and is lower today. So I would expect that theme to fizzle out and eventually start going reverse, where any morning spike is met with heavy selling, and that's kind of the end of this little mini run of cheap stocks. But we will see with LYT. I struggle to even call it a stock or a real company, but that's kind of where we are today with the top gapper. Let's see what else is on the list. So PHUN and DWAC look to be gapping up a little bit. Kind of hard to judge these stocks when they fade so far off their highs. So PHUN, started out as like 11, 12-cent stock, runs all the way up towards 50 cents. Huge move. Drop that, what'd they have? Was it an offering? Just, was it at the market? Huddy?
Which stock? I'm sorry, I'm like still reading LYT.
PHUN.
PHUN, I believe it was an at the market offering.
Pretty much 3 candles down like 60, 70% off those highs. And, like I was saying, it's kind of difficult to approach these in the aftermath of that move because it is such a big move so fast. And I would say about half the time you get further fade where the stock can't really bounce. Everyone's bagged and it just kind of fades off. Sometimes like this, the bounce is kind of lengthened a bit and we bounce for longer than most people think. I know there's a lot of people shorting yesterday. I know Kyle was shorting live here on the show yesterday morning into that 24-cent support acting as resistance. So we'll see if this bounce continues any higher back towards 30 or if this kind of bounce high fizzles out and then we do continue to fade. Same kind of thing with DWAC. DWAC didn't get hit as hard at after hours as PHUN off of that news. Did kind of squeeze out yesterday and then is gapping up kind of slightly right now, kind of mid-range. I'm not looking at that one really today for first red day either once we fade $6 off the highs. But those are some gappers bouncing back today. Next one is CELU, kind of another cheapy gapping. And this kind of, as we go down the scanner, we're generally trying to focus on the biggest runners of the day, 50% plus. Where are the most eyes going to be? What are the most people going to be paying attention to? Because we want stocks that have a market, that are a vehicle, that are doing massive volume, that have excessive range, that have some sort of catalyst, that maybe have some dilution for an edge. Looking for stocks that might potentially be active down the road, just so we can kind of get a good understanding of what they're all about, what's their cash situation like, what's their behavioral history in terms of support and resistance, what do they do on gap days and multi-day runs. As we kind of get down into the lower gappers, you generally get less interest, less volume, but we'll take a look at this one. It is kind of borderline before we answer any questions and get on out of here. CELU.
Not gapping.
You don't have a gap?
CELU?
CELU?
Oh.
Cellularity. That's a cool name. 172 million flow. Biotechnology company. Developing allogenic, cryopreserved, off-the-shelf, placental-derived cell therapies. That is a sentence. No news this morning that I can see. Late filings coming in. Cheaper stock, 25 cents right now. Overall risk is high. Have some cash, but they only have 2 months left. They're a SPAC. Nothing really here for me, and that mostly goes off the daily chart. I really want to dive into the fundamentals and filings on stocks that are, like I said, in that big gap and crap threshold that are 50, 60, 70+% up on the day, that I know a lot of people are going to be pushing the buy button out of the gate. A lot of people are going to be pushing the short button on out of the gate, and I want to know where the edge lies with these kind of lower priced, smaller gaps. It's hard to really do too much due diligence that tells me what this stock's going to do. Looks like it's going to do historical volume over the last year, 2 years. Beaten down stock, top left to bottom right. There are some resistance levels that make sense, but kind of what I was just saying with LYT. These cheaper stocks are going to become less and less of interest to me. I don't think there's a lot of people looking at this to short. Not sure with no news and not much going on with this company if there's really going to be that many people buying it up either, unless there's still people just looking at cheap stocks and buying them out of the gate. But yeah, do you have anything to say about CELU?
Yeah, they have like, I don't know, over 100 million shares in an ATM to sell into. I don't think that's going to be very good for this no news gap up. Kind of a chart where you have a lot of overhead resistance. It's not like it's, I mean, 26 million shares on the day is going to be its like all-time highs, but it's not like it doesn't trade 6 million shares on the regular at different prices. So it's not actually that much dollar volume for what, it's not going to be record breaking for CELU. And it might be, but I don't think in the sense where it's like abnormal. I think they're probably going to use that ATM. And I think, you know, majority, like these cheaper companies, the reason you're seeing so many gaps, LYT, CELU, probably both of them, is that they know that, you know, the cheaper price range has been hot. So they're manipulating their stock up in order to dump some paper onto retail who thinks that they're going to catch the next PHUN or CRGE or whatever. It's really a bad game to play, in my opinion. It's kind of like playing whack-a-mole. And you're like buying the worst of the worst companies and praying that that's the one that moves 300%. It's like a lotto ticket, really. Odds are terrible because these companies are so terrible. Like the more I read into LYT, the more I think, oh my God, they have so much shares to dump. And I wonder, just because Dilution Tracker says they can't, if they can or not, because this is like a, you know, a liquidation scam. They can do weird things. So I don't think CELU is the same as LYT, but I kind of put them in the same boat, whereas like a lot of these cheaper stocks are going to try to fabricate some moves right now, get a good gap up to get traders interested, and then if they have like diluted futures, they're going to use them, especially if they need the cash and they haven't been able to use them in recent past. That's like even more so. So yeah, I'm a dumb. I'd probably stay away from these religiously. You know, I don't really care to play the short side for 10 cents, 5 cents a range. I don't think it's, you know, good risk reward at the gutter prices down here. And at the same time, like, again, I'm not going to be buying any of these. They're the worst companies. I think that's a fool's man's game.
Yeah, that's kind of the thing about, you know, short-term themes in the market, whether it be sectors, types of catalyst, price ranges. You generally see the first few, you know, the first one happens, people recognize the similarities between that and the newest gapper. That one has a nice move, as we saw with last week, and then it just kind of gets slowly worse. You know, PHUN kind of woke everyone up to the fact that it's not all sunshine and rainbows within minutes. What?
Can I interject here?
Interject.
PHUN is the perfect example, right? Like you have a hot theme in the cheap sector. You know that the ones with volume, you know, have at least good range, and you know you've seen, you know, proof of evidence that the price range is hot. So here comes PHUN. It's actually built better than most, given the catalyst, given the volume, given the history of the chart. It's built better than most on a technical basis, but again, like it's a 12-cent stock for a reason. And like I'll be honest, like I was one of the people that was kind of swinging it. I had a really good average, still ended up, you know, losing on it. But I had a really good average, and one of my buddies, you know, asked me, he said, like, is there a risk of dilution? And I said, of course, like 1000%. Look at this company's financials. Like, it's terrible. Like, this is not something that you treat with, you know, $100,000 position sizes. It's more of like, you know, just a fun, I mean, I guess for me, it was like a fun little gamble. But the reality is these are horrid companies, and asking for continuation is really a tall glass to ask for. And Fun showed like pretty much everyone what they're capable of, which is like disastrous, toxic things. And it's not like it wasn't predictable. It's not like you couldn't look into their balance sheet and see that they were struggling for cash and needed it yesterday, you know, and all of a sudden they have all this liquidity and percent gain from something that's not even directly related to them. It's like the perfect event for them to extract liquidity from the market, and which is their goal. Their goal is to do that. Their goal is not to make you money. Their goal is to manipulate so that they can get money. And so that they can survive and continue to line their pockets, probably, you know, end goal. So yeah, even when you have a good setup, like on all technical terms, like you're still dealing with stocks that have done really bad things to shareholders in the past and will continue to do them at their will. And I think everyone needs to be kind of aware of the cheap, you know, price range for that reason.
For sure. Any questions? You guys in the chat are quiet today. Any tickers you want to talk about? Red Candle says they shorted LAES yesterday for 2.5R. Nice. A little bounce short.
Sounds like fun.
Yeah, I like 2.5R. That one's still holding up, so we'll see. If no one's questions come in here in the next few seconds, we'll wrap her up. If you guys are looking to get over in the room, Huddy's got a webinar today at 11 a.m. You can get in for $7 for 7 days. Get access for a week to 4-leaf. Video lessons, 2 webinars a week. Watch list, trade alerts, the room, all that good stuff, being part of a good community that is on the rise. Some stuff going on in there already this morning, and that's where we're going to head if there are no more questions or any questions. Everyone's bored of this market right now. Pretty slow week, someone says. Yeah, it is what it is. When you start to look at things from a bigger, 30,000 foot view, the market is a lot less bouncy in your eyes if you start to think that 2 weeks out of the entire year really don't mean anything. There's going to be some stretch, probably multiple times this year, where that is really going to be the time to make the money, and the rest of the time it's going to be about protecting. Do you find that patterns that worked last year are no longer working, Huddy?
That's such a vague
Yeah.
statement. Like, do you find that all patterns from last year no longer work? Like, what? How can I even respond to that? Like, first of all, as if I trade every single pattern under the sun, right? You got to be a little bit more specific with your question. Like, do my patterns, and then even my patterns, like which specific patterns? Are they not working because they're not coming around? Are they not working because the technicals are wrong and the market environments are wrong? Like, you got to ask a better question than that, because I just can't tell you yes or no, like based off that. Here's the answer. There are some patterns that don't work and there are some patterns that do, and without more context, I can't really give you a more defined answer.
Yeah, I think it's a little broad, but in essence, the patterns that we've been trading for 7-8 years, some of us, they have stood the test of time, and they do go through periods. The market's very cyclical, especially small caps, and there are periods when breakouts are working phenomenally. There are definitely periods, especially a lot of last year, where breakouts just weren't there because we didn't have multi-day runners. If we don't have multi-day runners, then we generally don't have extended stocks to have first red days on. If we don't have first red days, then we don't necessarily have stocks to bounce and for first green days. So it all really comes down to, are there runners or not for me? And then the patterns that we trade generally work in small cap land. But over the past few years, the differences of 2020 and 2021 to 2022, to the differences of 2023, to where we're at now in 2024, every year has something different, has periods of time where certain stuff's working better than others. And it's kind of up to the trader at hand how much they want to adapt, how much they want to switch things up. Do they just want to go super patient, take less trades when the market's not there for them, and then turn it on when the market is there, and that's when they make their money? It's really all up to the trader at hand. But the patterns that we trade do go through cycles where they work really well, and others where tweaks need to be made to continue that level of success. All right, another 2 questions, then we'll get on out of here. How long do these slow periods of the market and small caps go on for? It's just random, completely random. It can be turned on overnight, as we've seen with like oil and gas stocks back in 2022 with the Ukraine-Russia situation. We can go from, who knows what this year has. We have an election year. There's going to be a lot of news, a lot of stuff going on in the world. It's, slower phases have been a part of pretty much every year I've been trading. Others have been slower more over the course of the whole year. Like 2023 was a lot slower over the whole year, but there's always pockets of momentum and volatility to take advantage of. Do you guys trade red to green or green to red setup? That's way too broad. Most stocks on every day go red to green or green to red. That doesn't mean there's a trade there. There's definitely situations where I think that level matters more than others, and that usually has to do with the daily chart and something to do with extension and volatility and how much range to the upside or the downside we've experienced in a short period of time. But all right, there we go. There's some few questions. Reminder, like I said, Huddy, webinar today, 11 a.m. Get in the room.
My webinar is tomorrow.
It's not today. I lied. Webinar's tomorrow, but you still have time to get in the room for $7 for 7 days. Bootcamp tickets are available on clovertrading.io as well. Early bird pricing is still there. The price will continue to increase as we get closer and closer to the event, which is the first weekend in March. Hope you guys are having a great week on this slower week in the market. Hopefully things turn on today. But that is it for this morning. Good morning, NASDAQ. We will see you all first thing tomorrow morning, 8:45 a.m. Everybody else, all you Clovers out there, we will see you in the room right now. So if you have any more questions, get those going in the chat, and let's have a fantastic Thursday. Thank you, Huddy, for being here.